Hello, I'm Hickey from interest.co.nz and welcome to a special housing report brought to you in association with the BNZ. It's actually a housing and a farming report. We're looking at sales in the market for real estate in both residential and agriculture. Because today we've got some numbers out from the Real Estate Institute on the number of farms sold in January. There were only 46 farms sold in the whole of the country in January. This is down more than a third from the same month a year ago and down from 195 in January 2008. In fact, there were only 7 dairy farms sold. The Real Estate Institute says it's alarmed by the fact that banks are not lending to help these deals go through. And when you look at the figures that the Reserve Bank puts out on the amount of agricultural lending in New Zealand in the 4 months to the end of December, there has been a fall of $315 million. These are actually the first falls in agricultural lending in 9 years in New Zealand. The banks are getting tough. That's because they know in years to come they'll have to put aside more capital and leverage that capital less when they're lending. There's an international move with regulators, both here and overseas, for banks to leverage less. Also in New Zealand, there has been a lot of lending into the farming sector, and the exposure of the banks has increased in the last decade or so, from around about 12% of total lending in farming to 16%. Now, some banks are more affected than others. National Bank and Rabobank have decreased their lending into the farming sector, or at least stopped its growth. BNZ and Westpac are understood to be increasing their lending into farming. But on the whole system is actually reducing its lending. Now, also looking at residential lending, we can see from figures from the Reserve Bank that mortgage approvals are still weak. There's actually a slight increase in the last week or two from the previous week, but remember, over Christmas and New Year, there's a lot of activity which is distorted because of holidays and the summer. But we're getting back towards supposed normal period. And you can see here from this chart that there has been a real step down in the amount of mortgage lending in the last year or so. Remember, there was a big spike up towards the beginning of 2009 as interest rates hit lows and many people jumped back into the market, and that fueled a rebound in the housing market through the middle of last year. But definitely there has been a drop in the number of home loan approvals as the banks tighten up. This is all because in the market we're seeing now a Mexican standoff between sellers who really don't want to sell for less than what they think it's worth. They don't want to take a loss. And buyers who really just don't think it's worth that much, and also who lack the bank lending to jump in there and overpay. So we see at the moment this Mexican standoff. The sellers who aren't being forced to sell by the banks are very reluctant to push through mortgagee sales, and then the buyers who either don't have the funds or can't make an economic case to buy something at a certain price. So that means volumes going through the market are very low and are likely to stay that way until something shifts that logjam. That may well be the banks getting tough. Well, I have to say it's unlikely given the banks in New Zealand are relatively strong, or those people in certain situations, let's say they're looking to retire or there's a marriage breakup or whatever, are forced to sell. I'm Hickey. That was a special housing report and a farming report brought to you in association with the BNZ.